Good morning, everyone. Welcome, welcome, welcome. Happy Hump Day. Hope everyone is having a good digital Wednesdays, guys. Matter of fact, I have to change that. Guys, I'm your host, The Digital Goat. Welcome to Digital Goats Academy. We're on Digital Wednesdays. Pretty much, I do my live trading session, guys, where I go over things that I'm personally looking in the market, discuss some things that may be going in the financial atmosphere, guys, dealing with day trading. So that's what we're going to get into right now. I got to pull up my chart. So if you guys just bear with me real quick. Also, if you're just now tuning in, make sure you guys do me a solid and hit that subscribe button on your way in or on your way out, whichever is more convenient to you guys. So I'm actually looking at Bloomberg right now. Let me see. All right, I'm actually looking at Bloomberg right now on my TV. And I see that we have the Fed rate decision that's coming on at 2 p.m. this afternoon. And then there's another rate decision for Euro. So obviously we know as day traders, guys, if you're jumping into the market, you probably want to be out of the market no later than 11 a.m. That'll pretty much save you from all the chaos that's going on. But let me go ahead and share my screen real quick. I haven't looked into the news yet. I'm pretty much just getting ready to start my day, guys. So what we can do real quick is do a quick look at what could be coming up on the economic calendar. I use my FX book. That's my news outlet for trading. You can use MSM Money. You can use Forex Factory. You can use Bloomberg. I use Bloomberg more so for like live news on things that it may not be showing me in article form, right? Right here. So let's look at that real quick. Let's look at testing. Someone on YouTube, let me know if you guys can still hear me okay, right? So this is the economic calendar that I use for my FX book. As you can see, I have it just, on the generic page. You can come up here to any of the options and look at yesterday, today, tomorrow, this week. I normally go on this week, but since we're focusing on today, especially since the rate decision is coming on, let's just go ahead and hit the today tab and scroll all the way down until the current time, which is 8 a.m. So we've already passed the 7:45 news, which was building permits. And you can see that it came out as expected. So that's like a neutral. That's like a neutral impact. So it's not positive or negative. Probably stayed the same from the last news, which was bullish momentum. Now we're heading into the next hour, 10 a.m. all the way until 2 p.m. And if you see all the news for the U.S. now, it's low impact until we get to like 10:30, which makes sense to me. It's low impact, but just within between these news outlets, the market can get kind of crazy, all the way up to 2 p.m. I will tell you that definitely, guys, you need to be out of that market by 2 p.m. And assess the market so you can jump in maybe at 2 p.m., 2:05, 2:30, something like that. Get a little bit more clarity on what the market is doing, right? Let's just jump into basically gold. I wanted to talk about gold. Hold on. So gold is still maintaining around that 1971 area. Popped up just slightly and actually dropped down a little bit. So what I am expecting, since we did hit like a level of resistance, hold on, let me let it load. I'm actually take my camera off because I actually think that it's making my software slower. I know what I look like. Hopefully that'll help just a little bit. Look at that. So we actually did have a setup yesterday. Only came down for like 33 pips before it pretty much hit a reversal. Now this thing did create a level of support, but when I'm seeing like these wicks right here, I don't like seeing that price to pretty much leave pretty much liquidity right here without actually collecting it with the candle. Yeah, collect it with the wick, but that was just to boost the momentum. So what my expectation is to see gold actually return back down. And that goes in correlation with what I've been looking at with indices. So for indices overall, they have been bullish. We've been bullish for US 30, we've been bullish since March. And for S&P, we've been bullish since February. So any type of movement that the market does really is just a pullback to continue up. I am looking for a potential pullback like in the near future, not right now, because the momentum is just too strong to the upside. So let me show you guys, and then I'll go back to gold on what I mean, because I want to talk about like S&P from here, right? After like in correlation with gold. And then give you guys potentially like what I'm looking at, what I need for price to do in order to find an entry. Now we are coming up to 830, which we know the market is going to react off of the 830 candle. So anything that I'm doing right now is just a potential, like, I wouldn't say a setup, but just a viewpoint until like the market shows us its actual hand, right? So if you see, let's go to the 4-hour time frame. I knew I was going to do that from this morning. But you see, price has been maintaining a constant uptrend, right? I know I got a lot of chaos with my fibs and stuff, but this was the last level of major resistance that I had that price broke out. The only thing is that price has yet to return to it. I don't think that price is going to return to it yet, but I am looking for a price to actually come back down to this zone around like the 34,464. Now this is US 30, right? The 34,46, 450, 34,450 to 34,225. Wow, that makes all the sense in the world. So I'm looking for a price to come in between that area whenever it decides to, and I'm looking for another buy entry. Now, obviously, when I get more clarity, I'm gonna make the attempt to catch the sell once it starts breaking structure. But I think we're still pretty aggressive to the upside. If you just look, what am I looking for? Heikin-Ashi candles, right? So Heikin-Ashi, most of y'all know, measures momentum. It measures the momentum in the market, right? Now, the more flat bottoms you see, that signifies the momentum. So you know how regular candlesticks, you have like a wick on both sides, or and it could be meaning something different. Normally, like if it's a bearish candle and you see like a wick on, I mean like no wick, normally like it's signifying like exhaustion in the market or something like that, right? Well, in this case, it's actually momentum. So when you see flat bottoms, flat tops, so for instance, when the market started selling Friday, June 16th, if we just zoom in, you see that every time the market produced a candle that had a flat top, no wick on the opposite side, the market pushed down, push down, push down. Now, what you want to see strong candles like this. By the time like this identified the momentum, the rest of it was just kind of choppy, but the momentum was carried on from these two candles right here, from the Sunday candle and well, the 5 o'clock candle and the 9 o'clock candle on June 18th, right? So that carried the momentum down. So now that we're looking at it, you see the same thing on the opposite side. Now that we're pushing up, price is actually in a strong bullish momentum. And to me, the candles that actually pushed this trend up was these two candles right here, because this is when the last time price actually was moving sideways or moving stagnant before it actually broke out and continued in this direction. So these two candles pretty much signified that, yes, we're still in a bullish trend. And until we get back to these two candles, let me highlight that. Well, until we break, I wouldn't say get back, because price could definitely retest these candles. But Until price breaks these candles, we would have to believe that price is still bullish. You see what I'm saying? So any drop would be short-term sells, all the way probably back down to the zone until price showed his hand and maybe decided to say, man, maybe I want to reach us a little bit lower. Now, I will say for US 30 overall, this is what I'm looking at. And this is what I mentioned to you guys before, that we've been bullish. So this line that I have, this gold line that I have, this was pretty much where I annotated that. Well, I wanted to catch it. That was my goal, to catch it. And I didn't catch it. I mean, I caught some of US 30, but man, would it have been great to, catch it down here and still ride that wave, especially if this thing is going to continue up. Now, you can't get any more perfect than this, but I don't want to, I don't want to, what's the term they say? Before the fat lady sings. I don't want to celebrate before the fat lady sings, because the market could actually, even though this is inverted head and shoulder, what the market could do is actually come back and at least retest this somewhere down here, lower than what we expected. So I was looking at US 30 to retest here, which still may be possible. And that's still along the line on price respecting the uptrend and just retesting lower areas that, again, we're not paying attention to because nobody's perfect in this market. But undoubtedly, we've been in an uptrend. Same thing with S&P. I don't know if I have this annotated, though. Oh, same thing, March. S&P, been bullish, inverted head and shoulder since March. Man, it was been moving so choppy that it was hard to really, like, the only way you were able to catch any moves is through, the straight ups and the straight downs. Any move right here, I know people are pulling out their hair. So again, consolidation right here. What color should I put that? Yeah, consolidation right here. You see, I'll turn it to a line chart. Now I know I got a lot of stuff going on. Let me get rid of the EMX. So you see right here, consolidation broke out, retested the breakout of the consolidation, then finally broke out. So, uptrend, same thing. We just need confirmation that price is ready to actually, return down here to retest or create some type of support and then continue to mark it up. So we can clearly see that S&P, US 30, probably the NASDAQ. I don't too much focus on Nas just because like it's a tech stock, and I've seen it to where S&P and US 30 are doing their thing bullish or bearish, and then Nas is completely doing the opposite. So I know there's a lot more that impacts Nas to be calling it right now. We're in an uptrend. We can take a peek at it. I mean, structure at the end of the day. Well, yeah, I would say that it's in an uptrend, but Nas looks like it's actually ready to try to retest down earlier than US 30 and S&P. See what I'm saying? So gold, right? Now, yesterday in my community, I gave out a sell for gold. Now, it was a short-term sell. It only gave us 30, 32, 33 pips from where it was coming down. But for me, what I wanted was a clear break of structure in order to analyze the market a little bit better, which it actually, reversed on us. But we were still able to catch it, at the end of the day. If anybody, was doing what they were supposed to be doing, they were able to catch that trade, make the first target that we had, and, go about their business, right? It came shy. It was like 32, 31 pips. But now gold currently is doing what? It broke out of a level and it's now returning either to the previous level that it broke out of or to its highest point. More than likely, right here, we have our first level of resistance, right? We're about to hit 830. If it breaks this and closes, then more than likely, we're still going to continue to the upside, all right? I know somebody may be like, well, duh, but do we patiently wait for these type of setups when we're looking in the market? Like everything normally is given to you if you're just patient enough to wait for it, right? You don't want to anticipate what the market may do. Many mistakes that I made early on in my career, you just kind of want to wait. We know 8:30 is coming out, so let's wait to see what 8:30 gives us. We are at a level of resistance. Now, if you're confused, like where the resistance is at, again, turn it to a line chart. You can see the dip where the market actually popped down and now returned to what? This level of resistance. It hasn't created or respected this resistance, not knowing if it wants to break a little bit higher. So what we need to see is like maybe like a small spike up or, even to the highest level of this resistance and then push it down. So something like this, unless it decides to just fall from here to confirm that, yes, this is now resistance because now we have 2 points of contact. What's my marker at? Now, all this stuff is relevant up until what? Up until like 11 a.m. 11 a.m. Is whatever the market is calling at that point because we have that high level of news coming out at 2 p.m. This is what I was looking for. So, either something like this. Something like that, or since we have 10 minutes till 8:30, I would definitely love to like for it to shoot down right now. So even if we have something like this or possible fake out, and then because we're at resistance, this is what I'm looking for, unless we get a breakout. But for me, it would have to close on within this 30-minute time frame for me to consider that this market is still remaining bullish, right? But this is our first stopping point. So anytime you look at the market, guys, you get to a roadblock, which is normally points of contact, which is either support or resistance. And you should expect for a price to respect that, right? But you wait for it, especially when you're getting into um, new market session. So we're in New York. We're only 20 minutes into New York, so it hasn't even had enough time to catch up with all that news that we saw. And any news that's tracking in once the market opens, truly at like 8:30, right? So I'm waiting 9 minutes until the market opens to see what it does. But we can start kind of looking at the candles to see what the market is showing us. Now, with this type of candle, this is kind of like a good sign to me on a 30-minute time frame. If you follow me, you've heard me mention something about a double doji. Now, I normally spot this on the selling side of the market. I can spot it on the bullish side of the market, but it's been easier for me to spot it during like selling opportunities versus buying opportunities. So right here, that's what this looks like to me. It's not going to look like that right now. But by the time new data forms, you'll start to see these probably candles get smaller. And this signifies something of a double doji. If not, still, I can identify a bearish pattern within it. But again, we're just waiting to see what the market does because we're at resistance, right? So we want to see what it's going to do and if it's going to continue to stay like that. Our best bet, because we still needed to break this 1970, at 1970, because that is actual support there, that'd definitely be the confirmation that tells us that the market is pushing down at least back to these levels until it decides to do what it wants to do. Now, I don't know what the rate hike is going to do to gold. I actually would expect it to come down, but that's maybe after it comes up a little bit, but we'll see what transpires. So we have 8 minutes left, guys. So just bear with me. Man, I wish I could play music without getting penalized, but whatever. You know what I could do? I could probably just show Bloomberg real quick while we wait for those 8 minutes.
So all the yield curve this is all it is the market's expectation of where short-term interest rates are going to be in the long term. And at some point, the Federal Reserve is going to lower interest rates. There's no doubt about that. The question is, will they start? So the idea that the Fed's going to hike and start to cut in 6 months, maybe that's where the market got things wrong. But is the 10-year necessarily mispriced? No, because the Federal Reserve might cut more later, right? So there could be an environment where the Fed stays at 5.5% for, say, 18 months because we have sticky inflation because all of our
You're at inflation. They're talking about inflation.
Or banks maybe, or maybe over-leveraged companies start to fail. Once that happens, the Federal Reserve wants to cut interest rates very aggressively, maybe down to say 2%. Well, if you do all that math and you say, okay, what's fair value for a 10-year in that scenario, we're perfectly priced for that. So there's multiple scenarios that the market's pricing. All we're saying, all the market's saying is rates will be lower 3-4 years from now than they are today. The vanilla spread is the difference. What the hell is he talking about? You're the pro. Which of 45 spreads out there chose 2 steps, 3 months, 30 years, 5 billion a curve, way out of the curve, 10, 30 dynamics. Which spread matters the most? Yeah, so the 2 that I look at is the 2-step spread. That is tended to be where the markets are expected to be the most liquid and where you get the best indication of the market's really thinking for economic activity. Also, for me, for the real economy, one of the spreads that I look at quite a lot, and this is kind of broken the cycle, and it never happened before in any of the cycles since World War II, is the Fed funds 5-year spread. And the reason is that tends to show where bank net interest margins are and creates the willingness for banks to lend short, right? So basically take in deposits and then lend in 5 years. Right? So auto loans.
Okay, I don't know what that was about. So if you guys see, gold is having a tough time. All right. So if you guys see, gold is having a tough time breaking the zone. Let's see what it's showing us on a smaller time frame. We got 3 minutes until 8:30. So let's kind of see what goes on with gold right now. The dollar picked back up some momentum from yesterday. Yep, came right back down. That is crazy, yo. I'm telling you guys, this stuff does not lie. I literally put this out yesterday. Now here's the neat thing about this, right? This is the DXY. So I was just showing again my community what the dollar was actually doing, what my thoughts were. So I drew this up, I think Monday, something like that. So I dropped this. Well, I mean, all this information was there, right? Price supports 21 EMA, right? So this was my 21 EMA. For most of you, y'all use like a 50, right? I use a 21 It's more accurate, in my opinion. Someone introduced it to me, but again, whatever you use for indicators, I don't have, I don't go on an indicator frenzy, but I still use it. Now, my 21 EMA, as you see, is crossing it. That's my purple. It is crossing it. Look what price did. Back to where the EMA was at. It created support. I literally wrote price supports. Now, was like the pattern looked different, but it showed like a break and retest, which is now on an hour time frame. It looked smaller, but it looked bigger, obviously, when the data was a little bit different. But if I draw this out, this is just a line. I didn't even mean for it to do this. Look, supports where price got bullish again. Now, here's the next kicker. I've been had this trend line. Now I know a lot of us probably are beyond trend lines, but I'm telling you, in order to gauge the market, you have to be able to see this mentally. You can't draw it out, right? You have to be able to see this stuff mentally. Like, don't be fooled by other traders that say, oh man, don't draw trend lines. Like, no, you need this information, guys. Trend line, right? Let me extend this. Let me extend it. Try to keep it as straight as possible of where it's at. Are you crazy? Are y'all seeing that shit? Maintaining. Now, possibility for a price to reach us is 100%, but still maintaining what? This trend line. Confirming what? The uptrend is still valid. So if we break this resistance, the uptrend is still valid as far as we know on the DXY. What does that do for us when we're trading other currency pairs? So pairs like Euro USD, if it's still bullish, we should see it come down. AUD USD, we should see it come down as long as they're weaker than the dollar. All right, 831 popped up a little bit on gold. Look at that fake out. Is that a fake out? See it struggling to break this resistance. Strong candle right there. Triple top right here. We still need to see it maintain it because I've seen where triple tops, give you this and then pop up. So we still need to see what happens in like the next 7 minutes. But it is still respecting this resistance unless we get a pop up like towards like 9 o'clock, guys. Y'all seeing that? Still maintaining this resistance. So this is a engulfing, bearish engulfing right here. Let's see how far this thing retests. Struggling to break to the upside. Are y'all seeing that? 21 EMA trying to. So now I can gauge my fib since I have a strong candle. I can gauge my fib to see how far the market retests just based off of this 1 minute candle, because now that I can see that we're at resistance, the only other difference would be if this thing just shoot up here, right? But we have a 50%, which anybody that knows like how I process the market is like 38 to 50% at a minimum. I got to see at least 50% if I'm going to make a judgment call to enter in the market. So you see it's at 50%. We're not done yet. You know what I'm saying? We still want to clean, like break a structure right here. We don't want anything to come up because again, the market could still fill all this liquidity up here where 786 is at, 618, you see? So we still want to see, like a candle shoot down and break structure right here. We don't want to see really like wicks unless it's like how this candle shot down with a wick and then created structure, but we want, the momentum to be big, you know what I'm saying? So still struggling, within the first 3 minutes. That's a good sign right there on the 1 minute. But again, I'm not going to stay on the 1 minute. I just like to break it down to see what it's doing on that smaller time frame. So if I can see, understanding the candlestick patterns, if I can see that, okay, whatever I'm seeing on the market, is it showing me on different time frames? You know what I'm saying? Not to confuse yourself, right? Bullish momentum. So we still got to wait. See, came right up to 786. That's why, you know, at a minimum, 50%, but definitely would like to see anything close to like 618, 786, something like that, just to establish, are we still, you know, bearish or bullish? See, she's showing like she wants to break to the upside. Which is fine, like I said, structure at the end of the day. Still on this resistance block, right? Like I said, 30 minutes is going to give us a clarity on like what it's actually trying to do versus like making an assumption. So we are struggling with breaking up here. Every time it's tried to break up here, it's popped down. So the resistance right now currently is valid. We still just need a confirmation of a close of a candle. So that way we don't get faked out. Now if you are trading, well, if you are entering, the better spot is always going to be like as high or to the top as possible, right? So even if you got in right here, this would have been a better zone than trying to get in like somewhere down here. People that's getting in down here are losing their minds right now. But definitely we get a break of this area right here. That's your confirmation. Like that candle. I'm gonna look at other stuff, and this is what we're gonna do. I'm gonna put an alert so I know it's breaking there. Confirm the sell up here, and then if it decides to break, say it breaks to the upside. I confirm the buy. But like you already see, I'm leaning towards more the sell. And if we do get a buy, it'll probably be like a lower entry. But again, we'll see. We'll see what the market gives us. I think it's important, leave yourself alerts. That way you don't have to pay attention to the market the whole time. Because obviously I'm not going to stay on here the entire time, guys. But this is just what my projections are. Because my main focus is gold. I do want to see what the market is going to show us after 2 p.m. So if I get a confirmation, y'all see what I'm looking at. I'm obviously selling gold probably to the next previous high. Let's see. Probably down. If we get that break of structure, I'll be selling gold probably to this imbalance candle down here. So let's look at it. So again, at the minimum, 50%. If you're looking at it, I doubt we'll get that. 500. I don't think we'll get something like that until after Fed Powell speaks. But my next area would be the next major level of support, which is on a 30-minute time frame. So that's a 380 pip potential move. Potential. And then if we break to the upside, gold breaks to the upside, I'm selling it all the way back up to the top of this resistance, which is 1983. But I'm more leaning towards the sell. So we're at resistance. Again, the market just has to respect it after it stops like playing around. But I'll update probably on Thursday, guys. But if you find value in this video, guys, in this live, man, please hit that subscribe button. If you guys want to join my community, you can reach out to me on my IG, which is at BTHEE. That's 2 E's, Digital Gold. At BTHEE Digital Gold, guys. You can reach out to me on IG. You can type in Digital Goats on IG and find me there. Reach out on the actual community page. And also on Facebook, you could just type in Digital Goats, guys, and you can reach out to me. I do provide courseware. I'm actually about to launch it the beginning of next month. So you guys can come in for free, free of charge in my Discord currently right now until we do the launch. And then, just build the community up from there, guys. So again, man, I hope you found value in the information that I provided today. And I will see you guys at the top because we're taking everybody to the top with us this year, man. It's Jordan year.